Okay, all right. Hello, Internet. Let's see here. Can I get all of this stuff pulled up here like I want? Dee. There we go. Nice. Hello, Internet. This is Zach Ritchie with Fund&Grow. I am a funding specialist here at Fund&Grow for the last 12 years. And so, what I'm going to be doing today is just kind of going over some general obstacles, I would say, that business owners and soon to be business owners are running into as we have found all over the internet. So we're going to be talking about a couple of things that are kind of standing in the way. And so the idea is, obviously, the floor is ultimately yours. If you have any questions or anything that is kind of on your mind, you can jump in any of the chats all over social media. I will see them on here, and I would be happy to answer any of your questions or topics of discussion. Let's see here. And then the other thing that I'm going to put in here as well is the ability to, we're calling it pre-qualify, but essentially get some information on what your credit currently looks like without doing a hard pull. And so I'm going to put that link in the chat as well, and I'll talk about that a little bit more here in just a second. So let me jump back over to the chat. Hello, everybody who's coming on board. Super appreciate you. I have been the face of the YouTube channel, so you may recognize me from some of the various content that I've been able to make. And so let's see. So there we go. There's the chat. I just threw in the chat or in the comments field. There should be a link which will take you to our particular page where you can fill out some information and get a look at what your credit looks like. But let's talk about one of the biggest mistakes that small business owners or soon-to-be startups make, and that is assuming that all funding is created equal. So when you are first starting out a business or you're first launching, getting funding together, getting capital together to invest with can be one of the biggest obstacles. And a lot of business owners or first-time entrepreneurs will basically like beg, borrow, and steal in order to, gather enough resources to actually launch what they're looking to launch. And so, looking at things like SBA loans or traditional loans or just using your cash that you have on hand, those are all sort of temptations out there to kind of get things off the ground. However, I would argue that the absolute best option to go with if you are first starting out with the business, or maybe you're within the first 2 years, would be something like 0% interest business credit. And so one factor that you have to keep in mind is if you're looking at like an SBA loan, a small business association loan, which is like the traditional method that a lot of small businesses will go to get funding, they want at least 2 years of revenue before they're even going to really consider you as a viable option for that type of funding. So if you're just starting out, if you've just launched your business, what are you supposed to do for those first 2 years? They're basically just telling you like, hey, stay afloat somehow, drain your savings account, borrow from your family, do whatever you got to do to stay afloat for 2 years, then come back to the SBA and maybe we'll start to qualify you for funding. Well, in that downtime in between, in that 2 years, which is so vital, using something like 0% interest business credit is a great way to go about it because they don't have those same kind of hangups. Now, in order to qualify for business credit, you want to have, a sturdy enough personal credit foundation as well as some kind of business entity. We'll talk about that in just a minute. But the idea is the requirements to get business credit is much lower than getting traditional loans. It's a lot more affordable because obviously most business credit comes in at 0% interest for at least 6 months, if not closer to a year or even longer, some as long as 22 months. And so 0% interest can be life-changing in the beginning stages of your business. And so by going the business credit route, it's not to say you can't ever go a traditional means or method to get funding. But what it means to you is you're able to get things up and running with your business right away So you're not stuck in limbo waiting to get to a point where you can start looking at traditional funds, traditional lending, the stuffy business loans and things along those lines. And so what we actually do at Fund&Grow is we teach our clients the ways of building up this kind of business credit so that you don't have to use your personal credit or your savings. You can keep your personal and your business expenses completely separate, which any accountant on earth is going to tell you is the right way to go. Now, Troy in the chat here said, I signed up 3 years ago and was going through improving my credit report. Is it still available for me to get funding? Troy, I would absolutely advise you to reach out to Fund&Grow directly. If you go to our website, fundandgrow.com, you can do the chat feature there and check in directly. Or if you still have anybody's email addresses from when you were working with Fund&Grow a few years back, I would absolutely reach out, because it sounds like you were on a performance plan to get your credit where you wanted it to be, so you'd better qualify for business credit. And so, in my humble opinion, I don't think it should be held against you. I think you should be totally up and running to start looking at more business credit. And to sort of jump off Troy's point here, that baseline that you want is about a 680. That's what the banks are looking at in order to start qualifying you for business credit. Now, the national average right now, I think, is between 685 and 700. So again, it's not looking at 800 scores just to get some kind of funding. Now, obviously, the higher your credit score is, typically the better chance you're going to have at obtaining larger amounts of business credit. But even just getting your foot in the door is monumental to get some kind of funding rolling in. So again, I would say if you're just about to launch a business, if you are just looking at maybe launching a business within the next 6 months, then now would be a perfect time to take a look at your credit situation and see what options you truly have. And so there's actually a link in the chat that I threw in there that will take you to a page that allows you to plug in a little bit of basic information, and it'll give you a screenshot, essentially a picture of what your overall lendability looks like in regards to the banks right now. Now, it doesn't mean like it's a guaranteed amount of money, like, oh, hey, you're going to get this much money right now. But what it means is it at least gives you a starting point to go, okay, where am I even at? Because you might be in a situation where you're just working on personal credit and you're not even thinking about business credit yet. That's very common. However, just by doing the normal things you've been doing with your personal credit, you may be qualifying for business funding that you could be using to launch a Shopify store, to launch a salon, a restaurant, a brick and mortar. If you're looking to do real estate investing, all those different things you can use this type of business capital for. So there is a link in the chat that you can go to. It should be pinned, and that will allow you to fill out some basic information. Again, it's a soft credit pull. It's not any kind of major hard inquiry on your credit report, but at least give you a general idea of where you're coming from in the world of business credit. Now, again, like I said, traditional loans, those can be great, especially if you're looking to scale. If your business has been around for a few years, then that's absolutely fantastic. But especially if you're just starting out, which I know so many people online right now are just in the beginning stages. They've got an idea, they're tired of a 9-to-5, or they're looking to add to whatever income is coming in. That you've got your 9-to-5 and you also want a side business. The side gig economy is at an all-time high right now. And so if you're looking to launch something beyond just like, hey, I'm going to do an Etsy shop or Shopify or whatever, then having access to business credit could be hugely beneficial for you. So definitely fill out some basic information there. The link is in the chat, and you should be able to at least get a ballpark idea of where your credit's at. And from there, you can start making some decisions. And one of those decisions may be to delve into business credit. And so if you start Googling things like business credit cards, you'll see that there are plenty of stories out there of people getting tremendous amounts of funding. However, if you start applying, you may only get some baby boo-boo amounts to start with. But it turns out that the difference between $20,000 in approvals and $200,000 in approvals is simply down to strategy. It's about credit card stacking. Now, if you look on YouTube, there are plenty of people who are throwing out the idea that credit card stacking doesn't work, that you can't go and apply for, any number of accounts at a time, and that you'll just get denied, et cetera, et cetera. I'm here to tell you that's not the case. What the case is like with most things in life, you have to go in with the right plan. If you just start applying for things willy-nilly, then yeah, it's not going to work out for you. But at Fund&Grow, what we have done is perfected the ways to get credit card stacking off the ground. We've been doing this for about 20 years, and in that time we have worked with, all kinds of different bank lenders to figure out what are they looking for, what are they not looking for. And so one of those ideas in play is credit card stacking. And so if you've never heard that term before, what credit card stacking is it's a system where you are applying for a batch of cards at a time, all same day. And the idea is you want to maximize the results that you can get by applying in a certain way. Now, the problem that a lot of people run into is that they will go way overboard. They're applying for like 10 or 11 cards, same day, same time. Well, after you get past maybe 4 or 5 applications, any bank after that is going to see the inquiries coming in from the initial applications and think that you've completely lost your mind. And so what you want to do instead is you want to keep that condensed to maybe, I would say, somewhere between maybe 3 to 5 different cards at hopefully 0% interest, hopefully at no annual fee. And from there, you would want to really take heed of how you want to be presented to these banks. So in recent time, I would say probably within the last year and a half, 2 years, we have found that the best order of operations for applications would be you want to go after a bank that you have some kind of existing history with first, even if it's not the most lucrative of credit offers, meaning like if you've got 2 cards that are on the table that you're interested in, and one card has like all these bells and whistles and amazing rewards and things like that. It's 0% for 18 months, blah, 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 blah. And then the other application has maybe not as great reward system, blah, 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 but it does have some cash back, things like that. And it's got 0% for, I don't know, let's say 6 months. But this is with a bank that you've actually had relationships with. You've had accounts with, checking account, savings account, whatever. Maybe you've had a personal credit card. Even though this is the more lucrative option, the one that you're maybe more excited about, you want to go with the option that you have some kind of skin in the game with first. And the reason for that is, statistically speaking, they are going to give you more money than a bank that you've never worked with before. Now, not to say there isn't time in credit card stacking to apply for both. It just means that when it comes to order of operations, you should absolutely be looking for whatever bank you've got a relationship with first. Even if that relationship is just like, hey, I've got a little baby checking account that I use from time to time, or maybe I've got like a savings account or a personal card. It can be something, maybe it's your mortgage, whatever the case may be. If you have a relationship with that bank, that is the number one on your list. And then from there, you start looking at, okay, are there reward systems that make sense for me? What are my options on the table here to make the most of this? Now, to anybody who's joining us, please feel free to throw any questions in the chat. Obviously, we're here to answer those types of questions and have these kind of funding discussions with you. Now, when it comes to what happens after you start applying, from there, you want to start negotiating with these lenders. You want to, call the underwriters of the bank and start sort of pleading your case a little bit. Even if you get approved, when you initially apply, you're going to get one of 3 responses back fairly quickly. You're either going to get approved, you're going to get denied, or they're going to want more information. Whatever the answer is, you want to start looking at what is the bank underwriting situation looking like. So you want to make those kind of calls and start pleading your case. Now, when I'm saying pleading your case, I mean just showcasing the strength that you're bringing to the table. Because prior to applying, you want to make sure your personal credit, your business situation is as strong as it can be. That doesn't mean it has to be perfect, but you want to know what strengths you have going in. So for example, let's say you've got a pretty strong personal credit foundation. You've got some good accounts with some high limits that you keep paid well, blah, 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 blah. You've maybe got a couple of loans. Things are looking good. But you've got a brand spanking new business. And we already talked about before, that brand spanking new business is going to struggle to get traditional funding through SBA loans, through bank loans, et cetera, et cetera. So if you know that your personal credit is looking better than your business itself, or not better, but it's looking a lot stronger than a brand spanking new business, then when it comes time to talk to these underwriters and start speaking with the banks, you do not want to go in saying like, hey, look how great my business is. That's brand spanking new and doesn't even have real revenue yet. No. Your first talking point would be, hey, look how well I've handled credit in the past. I have handled these accounts for several years. I always pay on time, blah, 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 et cetera, et cetera. You want to make sure that that's the best foot forward that you're going with, because ultimately when you launch an application, it's just an AI program. It's just a computer back at home base that's crunching the numbers and spitting out an answer. So once you get a human being on the phone, then you can truly start having a conversation about why they should be giving you more money. Now, Timothy asked in the chat, if you don't have a relationship with these banks but strong credit profile, can I still get high credit cards? Absolutely. But the idea is, if you happen to have, like, let's say there's 5 banks that you want to go with, and you only have relationships with 2 of them. I'm not saying throw the other 3 away. I'm just saying make sure that you're applying to the ones that you have a relationship with first as your priority. Then everybody else can fall in line. But this may be, if you've got a strong credit profile, this may be the great first step that you're looking for. It may be a situation. In fact, Timothy, let me give you an example. With American Express is very much in the world of building relationships. They put so much emphasis on relationships that they have with consumers. So, if you apply for an American Express business card and you have no experience, you have no relationship with American Express whatsoever, you never even have a Costco card. So you apply to American Express for the first time. They're going to look at your credit and they're going to say, wow, this looks really great. Timothy's got his head on right. He's making great payments. His credit looks wonderful. They are still going to more than likely approve you for what we'll call like a training wheels amount of funding. They're going to approve you for like $2,000 to start with. Now, a lot of business owners will be offended by that. And they'll say, oh my God, this is not worth my time. I can't believe I wasted an application. And they'll take that credit card and they'll throw it in a drawer and they're not going to even think about it because it's so insulting. And 6 months go by and then they decide, you know what? My credit looks even better than it did the first time. I'm applying for more business credit. I'm going to do another batch of credit applications to credit card stack another round. And so they'll go back to American Express and they'll apply again. And their credit looks even better the second time around. And American Express will review the situation and they'll go, wow, this credit situation looks really fantastic. We love what the business is doing. We will approve you for another business credit card. And they will approve you for another $2,000. And the reason being, because you did not play the game that they wanted you to play. Now, if you take that first approved credit card for only $2,000, you make a couple of payments on it, you charge a little bit on it, maybe you run a couple of business dinners on it, whatever, and you're making some good payments, then in 3 months' time, you could be reaching back out to them and they could be increasing that limit or approving an additional business card for $30,000 instead of 2. It's about building those relationships. Now, American Express happens to be an example where they take the relationship part super serious. Now, that being said, if you're jumping into, let's say, here in the South, Truist Bank is a bank that people use a lot. And so they're ones that they like relationships, but they know that obviously it's all going to start somewhere. So you can absolutely get higher approvals with a brand new bank. However, I think it still comes down to talking to underwriters. I think it still comes down to, even if this is the first time you've ever reached out to a bank, regardless of what answer they give you, I'm telling you right now, Timothy, I don't care if they say you are approved or you are denied or we want more information. Regardless of what they tell you, I want you to contact that underwriter and say, hey, I appreciate that you approved me for $10,000, but if you look at my personal credit situation, you can see that in the past I've handled accounts for that much and more, considerably more. And so I would love for you to be my number one bank for my business. And as such, I would love to have a $25,000 card here. Because if you give me that $25,000 card, then I will make you my number one business for banking, my number one banking for business. And you'll be my end all be all. And to have those kinds of conversations, bring up some facts, bring up some things that are working in your favor. And in fact, what I was just talking about there is exactly the kind of thing that Fund&Grow does all the time. We are teaching our clients how to handle these banks and what to do to get the maximum amount of funding possible, whether it be how to best present yourself, what the banks are currently looking at, what are the trends looking like right now, in order to get the kind of results that you're looking for. And so I'm actually going to throw a link back in the chat here. That is what we're calling like a pre-qualification page. But essentially all it is you knock out your basic information on there, and it'll do a soft pull to really take a clear picture of what your credit looks like right now. And then from there, you can start weighing out options of like, well, do I want to go after business credit right now? Do I want to work on getting my personal credit where I want it to be first? Or do I need somebody to kind of guide me through this a little bit? And you can even schedule a talk with our team, and we can start guiding some ideas on what the next step may want to be. Now, Timothy also says, hey, I've got a 13-year-old Bank of America card with a $2,500 limit, and I've got a municipal credit union account for 20 grand, but it's only 4 months old. Which holds more value? And thank you, Timothy. I appreciate the compliment. So in my opinion, although that credit union account for $20,000 is certainly helpful, and I would say would be helpful when you are talking with the bank underwriters, because you can say, hey, Chase Bank, I appreciate that you approved me for 5 grand, but Municipal Credit Union over here gave me 20, and I've been rocking that thing for almost 6 months now with no problems. I think you need to catch up with them because I would love Chase to be my number one, but I can't make you my number one if you've only approved me for 5 grand, and there's somebody over here who's tripled that right now. So although that $20,000 with the credit union does give you a lot of leverage, I think Bank of America is going to honestly approve you for more. That would be my guess. 13 years of sticking with one bank is going to carry a lot of weight. Now, that $2,500 limit with Bank of America is not obviously a world ender in terms of holy moly, what an amazing amount of funding you've got. But I think that you've got the history that you can really use to your advantage when talking with Bank of America, as long as obviously the relationship's good. If it's been 13 years of a hot mess, then maybe not. But if it's been 13 years of like steady, I'm on the Christmas card list every year, then wonderful. I would absolutely put Bank of America at the top of the list there. Now, another thing that comes up a lot is when it comes to business entities. So we've been talking a little bit about the personal credit foundation, that you want at least a couple of strong personal credit cards if you can. A loan or two is going to be good, and obviously, as Timothy was just mentioning, longevity can help a lot. But when it comes to the business, there has been a lot of misinformation out there lately, namely in terms of I named my business, such and such associates. Am I in trouble now? Are banks going to hate me? Or, I set up a sole proprietorship, or I set up an LLC. Am I doomed? Like, what have I screwed this up already? What's the right structure to use to get the most funding? And again, this is something that Fund&Grow handles all the time. We advise, we consult with our clients and coach them to make sure that everything's looking as strong as possible. Now, I'm going to tell you that in the last, I would say 5 years or so, that the entity type does not really play a huge part anymore. Now, there was a time when the type of entity was everything. If you had, an LLC, then you had the world by the short hairs. If you had a sole proprietorship, then it was like, well, this is going to be a little bit of a struggle. Because of how much entrepreneurship and venturing out on their own has exploded since COVID, there's been so many businesses that have gotten started within the last 5 years. The overall type of entity is not ultimately the deciding factor. I will say that length of time that it's been around still plays a huge part. If you've got a business that's been around for 5-10 years, that obviously carries a lot of weight. But in terms of type of entity, it doesn't really make or break you anymore. Now, I will say industry does matter in terms of what is legal on the federal level, which sounds silly. But right now, the two industries that are struggling the most in terms of getting funding directly to use for that business is crypto and cannabis. So cryptocurrencies and cannabis are both really struggling to obtain direct funding from a bank, which is not entirely surprising. I mean, the reason why, you can't just use a credit card at most dispensaries is because the federal government's like, we're not really sure about this. And so as such, the banks and the lenders don't really give them merchant accounts and things like that. So crypto and cannabis are the two no-goes right now in terms of overall industry to be approaching a lender with. Now, that being said, That doesn't mean if, oh no, I just started a cannabis company, now I'm in trouble. No, no, no. What I'm saying is what you would want to do in that case is you would want to really present yourself as something different. And I'm not saying lie. I'm not saying like, oh, tell them you sell umbrellas instead. No, no, no. What I'm saying is it's a matter of restructuring. It would be a matter of setting up an entity, LLC, sole proprietorship, whatever, in a field like business management. And then you would move forward with obtaining business capital through the business management idea. And then from there, you would turn and then use that funding to market the cannabis company or whatever. So the idea is if you're in one of those two industries that's having a tough time, there are still workarounds. It's just a matter of how are you presenting yourself. And to go back to a previous point, when you're talking to these underwriters, when you're really, showcasing yourself to these banks to try to get the maximum amount of funding possible, what you want to do is go in with the idea of what is your best feature. Is it that the business has been around for 10 years and now you're treating it seriously and working on getting capital for it? Or is it, well, the business is brand new, but my personal credit is pretty good and I've been doing a really good job of maintaining that. And so let's focus our attention on that part. You're still moving with that two-part system, but it's about which factor is working better in your favor. Don't go into a conversation and be like, hey, so I know the business looks bad. No, 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 no. You want to go in going, hey, look how strong these relationships have been on the credit side of things and on the personal side. And now I'm looking to expand my horizons here and I'm looking to really take this seriously. And so I have an entity that's new, but it's based off of this, this history that I've built here. So also in the chat here says, in January of 2026, two of my new personal credit cards will be 6 months old. So if you open something new, should you wait 6 months before applying? And why is 6 the magic number? You're right. It's a weird thing, but 6 months of seasoning is the minimum amount of time that a bank wants to see as sort of that judgment call. They have considered 6 months to be sort of a safe amount of time to show that you didn't go like run off to Vegas or something like that. That's the idea. That 6 months time is sort of a sweet spot. And that's what the banks have decided is like the reasonable amount of time to show that you didn't lose your mind. So if you have newer credit, if you've got newer accounts of any kind on the personal side, typically you want to give them at least 6 months seasoning before you start jumping into something else. Also, and I'll talk about this in just a minute, I got to adjust something. In addition to the accounts themselves, the other thing that you're dealing with on the 6 month mark is inquiries on your credit. So the other thing that you're dealing with in addition to just the accounts themselves being newish is inquiries. So when you apply for anything and it pulls your personal credit, it's usually going to leave some kind of inquiry, except for the pre-qualification that I threw in the chat. That does not do a hard pull. So a little plug in there. But the shelf life of an inquiry is 2 years, which means if you don't touch anything on your credit report, but you happen to apply for a few things, that in 2 years' time, the inquiries or the evidence that you applied for something will fall off your credit report naturally. So that 2-year time span is actually broken up into 6 month intervals. And so what that means is if you apply for something now, then that dings your credit a little bit, it drops the score a little bit. In 6 months' time, even if you didn't do anything differently, you make all your payments the same, the balances are still basically the same, et cetera, et cetera. In 6 months' time, you would see a small jump up in your credit score because the impact of that inquiry will have been cut in half. And then in another 6 months, which would be a year later, it would be cut in half again, and so on and so forth until it falls off completely. So if you called into Fund&Grow previously, which Timothy did, and they told you, well, give your new accounts about 6 months of seasoning before we start applying for something, that would be the reason why. They want to make sure that the impact of those new accounts showing up, new inquiries showing up, et cetera, is at least dampened a little bit before jumping into new applications for funding. So when it comes to also getting a question about credit utilization as well, when you're looking at applying for business credit, obviously DTI is going to be a factor, but they're going to be looking at the credit utilization on the credit accounts specifically. So for example, if you've got like, hey, I got a couple of mortgages or I've got a loan or two or whatever, that utilization is not really going to be involved in the conversation like credit cards would be. So for example, if you're like, hey, I've got a mortgage or a HELOC, and it looks like it's carrying a pretty big balance, but my credit cards are all paid off, the credit cards being paid off is what's going to ultimately matter to the lender. If, however, you're like, oh, here's my auto loan, and it only has 2 more payments left, so that utilization is really low, but all of my credit cards are maxed out, the banks are not going to care that, hey, you've almost paid off your car, or hey, this loan is almost paid off. They're going to care that, hey, the stuff that you handle on a day-to-day basis, the stuff that you've got the most power over, because in most cases, paying a loan early is not really going to, they don't give you a prize for that. The credit card is what you have power over on a regular basis that you could decide to pay off today if you wanted to. That is what they're going to be worried about in terms of the credit utilization, more so than just, hey, I've got some loans that I'm carrying some balances on. So that's ultimately when you're going for applications, that's what you want to be most aware of is, how are your debts looking on the credit side? Now, we talked a little bit about opening new credit, applying for credit. What do you do if you get denied? So for most people, and this goes beyond just business, this is like personal credit, business credit, whatever. Most people, when they apply for something, like let's say you're at a store and they're like, oh, hey, if here's a TJ Maxx card opportunity and it'll get you whatever percentage off if you apply today, yeah. And they apply and it comes back denied. Vast majority of credit users and people in the US will just look at that denial and just go like, oh, I guess they just didn't like me. And that's it. That's the end of the story. But in reality, an AI program essentially crunched some numbers, spit out a response, and then that's it. So if you are denied, in most cases, it is some rinky-dink little, behind the scenes computer issue more so than a judgment of you as a credit user. Now, if you've got like a 500 credit score and you're just applying because you're just like, I don't know, I said yes. The nice cashier asked me if I wanted to apply for a TJ Maxx card. I said yes. I had no business doing that. Then okay, that's the denial is that. But if you're in a situation where you're like, yeah, I do pretty well with my credit. I handle things pretty okay. So I applied for this thing and it came back denied. I want you to immediately contact the underwriter of that bank. I want you to call them and go, I want to hear from you. Why did I get denied on this? And in many cases, they'll go, I don't even know why you got denied for this. Your credit looks fine to me. It was some glitch in the system, or they counted this wrong, or they thought that this was this, whatever the case is. In a lot of situations, the denial is not the final say. It's about, again, approaching this confidently. And that is one of those things that Fund&Grow will teach you. If you get involved with Fund&Grow, one of the things that we will coach you on is how to present yourself, how to talk to these underwriters. Because it makes perfect sense if you think about it. When you are approaching an underwriter of any bank and you're making any sort of request, you're requesting a limit increase on a credit card, you want a different type of account that you've already had, or you're trying to overturn a denial. Regardless of whatever the situation is, the key factor that you have to keep in mind when you are talking to a bank underwriter is confidence. It doesn't matter how good your credit is, or how amazing your business is, or that you're going to be the next big thing in the market. If you call a bank underwriter and they can hear the flop sweat over the phone, they are not going to go with you on this journey. But if you call in with confidence and go, hey, I know that my business looks brand new. However, if you look at my credit, you can see that I have been on time for the last 2 years. Everything's looking good on that front. I've got a variety of accounts, and I'm looking to take this seriously in 2026, and I want you to be on the ground floor of it. That is the kind of confidence you have to have. You have to go, hey, this is what my business is going to be doing. I've already done the research on this niche market. I expect that we'll be profitable within the first year, and blah, 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 blah. That you want to have those kind of talking points. You want to go into the conversation going, hey, I don't want to waste your time. I'm calling you because I think this decision was incorrect. I would love for you to take another look at my credit situation and tell me if there's anything that jumps out at you. And by starting that conversation, you have now opened the door to negotiating. Now, I also see here someone's mentioning that they've got a 7-year-old credit card that got closed 2 days ago with no derogatory marks. Or reports is closed when my credit history drop. Does closed high history credit card still report to your credit history? So it is still going to report that the account was in existence. But by closing the card, you are shifting your overall open credit history. So you will probably see, I would imagine, somewhat of a drop in your credit score, at least temporarily, because one of the big factors that makes up your credit is the length of time that you've had accounts open. So if you're in a situation where you're like, yeah, I've had this card for 10 years, I don't love it, I don't use it anymore, it's all paid off, I'm going to close it. I understand it from the point of view of like keeping things neat and tidy with your credit, et cetera, but it can hurt you overall because it's a situation where that makes up a big piece of what your credit looks like in the eyes of the bank, because they want to know that you're using this funding and using it well. They are not interested in somebody who's like, hey, I've never used credit before, or hey, I'm brand new to this, or whatever. They want to see that you are a solid pick. And so that's something to keep in mind. Now, again, in this particular person's case, I don't know what the situation was that required that you close out that card, but I would certainly hold back on closing any other older cards for the time being, even if it's something that you're not using because maybe the interest rate is not great or whatever the case may be. But again, these are all things: applying, negotiating, deciding what's the best move for your credit. These are all the basics that we will be teaching you at Fund&Grow. So make sure that you are, absolutely clicking on the link in the chat, that you're pre-qualifying, that you're filling out the information so you can at least get a snapshot of what the banks would be saying if they were to look at your credit right now. So in fact, Timothy in the chat here, if you haven't already, bud, definitely fill out that pre-qual on the link. It's not going to do a hard pull, but you'll at least get a general idea of what's going on with your credit right now, and you can see how some of these changes are affecting you, and maybe pick up where you left off in talking with us. Now, one other thing I want to talk about here. So I've been kind of waving the flag about like how great business credit is, that it can help you tremendously if you're just starting out, that it's something that can truly change the trajectory of your new business, or even if you're looking to scale. But business credit isn't just about like, ooh, spend. It's a lever for growth if you know how to pull it properly. So how do you use business credit the right way? Well, obviously, Fund&Grow will help with that as well. They will teach you, what to do, what not to do. What are the best reward systems, cashback bonuses. You can even use business cards to cover, B2B operations that don't accept credit cards. Or let's say, for example, you're using like a contractor and they don't accept credit cards. And you don't, have the ability to just write them a check. There are third-party processing companies that will essentially be the middleman for you, where you just basically swipe the card with them. You show them the invoice of like, hey, this business is charging me X amount of money, and then this third-party processor will send them a check or ACH or whatever and pay them whatever amount they're charging you, and then they take like a 2.5% fee out of the top or whatever. So the idea is you can utilize third-party processors to cover costs for things instead of doing like a cash advance or something bad like that. Or you could really utilize cash rewards. So for example, we talked about at the very beginning of this call about looking into business credit as a way to help launch your business. But what if you're in a situation where you already have a business up and running and you're covering costs and things like that, but you're not really getting anything out of it other than just like you're just keeping the lights on? Well, if you had access to business credit, You could take these expenses that are coming up normally and you could be throwing them on business cards and still making the normal payments that you would be normal anyway, but you'd be getting cash back or rewards out of the deal. Let's say you got a business, maybe you're doing like investment or something like that, and you're traveling a lot. If you had a really good business card with great rewards on travel and you were throwing your monthly internet bill or electricity or, car rentals, whatever, you're throwing all that on that business card and then paying it off like normal because you'd be still paying those normal bills if they were just coming out of your checking account. You could be getting buku rewards points for travel, cash back. In fact, for Fund&Grow specifically, we put our office expenses on business credit cards ourselves and pay them off. So like electricity, every time we cater events for the staff, internet, all these types of things, pay per click, all these types of expenses that we're going to have anyway. We're not like inventing new things to spend money on. These are just things we're stuck spending money on anyway. But by throwing them on business cards, every quarter we're getting like $5,000 back in cash rewards. And that's just off of spending we're doing anyway. Like I'm saying, not making up new things to spend money on. I'm like watching the door here, make sure Dave Ramsey doesn't like donkey kick the door in and yell at me and tell me I'm an idiot. I'm not saying make up new things to spend money on. What I'm saying is, if you have expenses already, like as someone who has sold things on Etsy or Shopify, there are little fees and things like that add up over time. By throwing that on a business card, it's keeping it organized. So come tax time, or if I'm talking with an accountant or a bookkeeper, I have basically a running tally of, hey, here's all the stuff that I had to spend on for my business. But in addition to that, I'm getting cash back, getting rewards, things along those lines. So beyond just having investment capital, having access to business credit can absolutely transform the way that you're running your business in terms of, hey, I need to spend more money on marketing, or I'm going to be doing a lot of traveling, or I'm going to get a camera and I'm going to do some more organic content for my business, blah 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 blah. These are all ideas that by throwing them onto business credit, you're going to be in a better situation overall, and you're not stuck going, oh great, now I'm I'm in the hole here, or all these accounts are costing me, all these bills are costing me, and I'm not getting anything out of it other than just keeping the lights on. So that's something to keep in mind. And so, that's another reason. That's something for if it's not about launching a business, if it's about like, hey, I've already got this thing up and running, but I want to run it better. Using business credit is a great way to go about that. Now, there is one more thing I wanted to talk about here. And obviously, once again, if there's any questions, if there's anything that you want to talk about, any discussion that you want to have when it comes to business financing or business credit, throw it in the chat. Wherever you're seeing this, you can throw it right in the chat. Make sure to give us a follow and a like if you can. That would really appreciate it and help keep me employed here. But one more thing I want to talk about is, so we talked about business credit cards, business funding from these banks and how great it is. Now, there is actually another type of business-related credit that I want to touch on. I should be sponsored by Alani. I'm sad I'm not sponsored. They're sponsoring the stream. So you have business credit cards from the major banks. We talked about applying, negotiating. They're looking at your personal credit as a jumping off point. They're looking at the business that you've got up and running. There is also a type of funding that we like to call corporate credit. And that's a type of funding through a company called Dun & Bradstreet. And that is non-recourse credit. So the difference is business credit essentially are the forms of credit cards that aren't showing up on your personal credit that you can use for any kind of expenses that you have for your business. Corporate credit with Dun & Bradstreet is a series of vendor trade lines. So instead of, hey, Bank of America is going to give me this much money, or hey, Chase Bank is going to give me this much money. Instead, it's, hey, I have an account with Home Depot that doesn't have any interest on it. It's like a net 30 account, which means whatever I spend on it, I have 30 days to pay back, or hey, I've got an account with Amazon or Uline Shipping or this marketing company or this t-shirt company or whatever. And the idea is it is completely non-recourse. They aren't looking at your personal credit. They don't care what your personal credit is. You could have filed bankruptcy 10 minutes ago. You could still be building corporate credit with Dun & Bradstreet. And if you build up that system long enough, you'll actually graduate beyond vendor trade lines. So instead of going with, oh, hey, I have these accounts with Amazon or da 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 da, but I can only use it with that company. If Home Depot gives you $50,000 in a vendor trade line, that doesn't mean you have $50,000 to go spend wherever you want. It means you have up to $50,000 that you can spend at Home Depot. If you work on that system of funding long enough, you will actually go beyond vendor trade lines and you'll start qualifying for commercial loans in the name of your business. So for example, the building that I'm speaking from right now, this office, this studio, was all purchased using a commercial loan from corporate credit from Dun & Bradstreet. This was not bought in any one person's name. This was bought through the business itself. And so corporate credit is an option out there that Fund&Grow also assists with. Now, obviously, that is something that is, I would say, a little bit higher level in terms of you kind of have to spend money to make money a little bit with that. Obviously, if you're setting up these accounts with places like, Home Depot or, Uline Shipping or something like that, they're going to expect that you're going to spend some kind of money with them. So it may be something that you want to wait till your business is up and running a little bit before jumping into, but it is something that is available out there if you so choose. And so I wanted to share one more time here the link that is in the chat. It's for our pre-qualification page. And essentially what that does is it gives you the opportunity to get a snapshot of what you're looking at on the personal side, because it does help to have a strong personal foundation when you are looking to start building up business capital. So like I said, you've got a ton of options out there. You've got business credit cards with all the major banks. You've got corporate credit with Dun & Bradstreet. There are plenty of opportunities out there to serve you and help you launch or grow whatever business that you want to do. Regardless of industry, regardless of how long it's been around or hasn't been around for, there are opportunities out there that traditional loans are not going to necessarily cover. So unless there's any more questions, anything else that anybody has, any other things I want to discuss, that's basically my time here. I want to thank everybody for joining me and anybody who's watching this after the fact. Again, the link should be in the chats there to get started with the pre-qualification, or basically the startup page for Fund&Grow. If you want to go beyond that, if you want to talk to my team directly, our number would be 800-996-0270 would be the number to call, and you can talk with my team. But essentially what we're here to do is we are here to help connect the dots in order to get you the maximum amount of funding possible so that you truly have the greatest opportunity to be a success in your market. That is the long and short here. We want to help business owners and entrepreneurs, solopreneurs, and first-time businesses to achieve what they deserve to achieve. And so that's been the ethos of Fund&Grow for the last 20 years. And so, like I said, if there's any questions or anything else, feel free to reach out to Fund&Grow. If you haven't already, please like and subscribe so that you can get more information on, the world of business capital. We just launched another video this past week. Great sit down with our CEO and the owner of Truca. They talked about mindset and about like investment, things like that. But we also do informative videos, usually starring me going over, all the ins and outs of funding right now and how things are evolving. And we want you to be able to evolve as well. So for everybody here, thank you all so much for joining me. I've been Zach Ritchie, and I look forward to